Hey everybody, welcome to the Ankerstar Wealth morning update. Also in the morning, 2 days in a row, at least morning in the time zone I'm in, which is out on the West Coast. So we're going to call that a win. We have three topics for you today, even though the market's closed. Got the final numbers in for the quarter already. We're going to talk about Apple. It's our number one holding in the book, and for most of it's the number one holding, unless it got lapped by something else, which I'm not going to talk about today. So we're going to talk. They're off 11%. We're going to talk about should you be concerned? Is it over for Apple? That sort of thing. Then we're going to transition to an area of Mike's expertise due to his background, and that's in the employment services. These are names you may or may not know. They're not often talked about. Robert Half, I had honestly never heard of, and Kelly Services, which I had heard of a long time ago, right? But haven't looked at those charts in a while, so I look forward to what Mike is going to tell us. And then I already looked at some scores of some matches, so I know that I'm sitting here at 4-0, but I'm interested to hear how everybody else is doing as Mike concludes the week with the wrap up of the first round of our Ankerstar Wealth Stock Madness. So with that, let's go ahead and get started. Remember, this is a financial education presentation. Do your own diligence before acting on anything in this presentation. Excuse me. More disclaimer information is available at ankerstarwealth.com. Let's take a look at Apple. You know it's a favorite of mine, and it's been a favorite for a long time. And even when it's down 10.93% on the year, it's still a favorite. But it's not about what we like, what we don't like. It's about whether the thesis holds. So why are we in Apple? Let's go back 10 years. They're the best tech company out there. Then I think it was unequivocal. And when you go to, let's just look at the all chart because that's fun, especially if you've been in Apple for a long time. I retired right here in 2013. Yeah, I was already in Apple. So, I'm happy. But you can't be biased by your own experience. You have to look at it and go, okay, 10 years ago, was Apple the best tech firm in the world? I think unequivocally. There's a couple others that could have challenged it. Now with the Magnificent Seven, I do think that's being challenged, right? And things can't go up forever. But there's been, we talked about the vertical integration moves that Apple's made. We've talked about their products that have been superior. You could make an argument now that the Google Samsung bones have caught up. I won't take you up on that argument, but I will say that it is the best tech firm in the world, in my opinion, but it's certainly challenged and almost on par with some other names that are out there. So going forward, I'm okay if you need to trim some of your Apple position because it's outsized. I do think, though, when you start to zoom into the 1-year chart, I don't know, we hit the highs around July of last year, touched that area. This is the beginning of the year. Sold off hard, came right back. So Apple comes back. We call it the snapback here at Ankerstar Wealth. We use that term a lot. It snaps back pretty hard when it does. So I expect that maybe we trade sideways. It's either going to snap back right now or it's going to snap back in June when they have the Worldwide Developers Conference that they have every year. You should watch the event if you haven't ever watched one. Excuse me, they're live streamed, which is they're going to come out with their AI initiatives. All I know about Apple is they're not going to miss, otherwise they wouldn't release it, right? So I'm excited about what they come up with, and I do think we see the stock higher from here. So if you're saying, yeah, I am overweight Apple and I do need to trim some, I would say wait unless you need that money for something else. I would just wait on Apple down here, right? So it's kind of at the bottom end of where it's been bouncing. So from a technical perspective, which we don't use a lot, but from a technical perspective, I would wait. But it's not the screaming buy that it used to be in years. So it's, trim if you need to, but I'm holding most of mine. So, all right, that's where we are with Apple. Let's go over to Mike. I will stop sharing and tell us about the employment companies out there that you have teed up.
Okay. When I started today, since the market was closed, I went ahead and opened my browser, looked at CNBC, and lo and behold, I see this article. Shocking. Here, let me go to it. 95% of Americans plan to look for a new job in 2024. I'm like, wow.
That can't be.
I know, unemployment rate's
95%.
I'm thinking 19 out of every 20. And I'm saying this is clickbait. But I got to look into the stats. And as I read this article and I read about 45% of the people say they need a higher income. And I don't know if this is supposed to be Kaya Abdul in this picture, but says that she had switched jobs 6 times in her industry since 2016. And as a former hiring manager, This would be me standing here going, we're not hiring you if you're switching jobs every 18 months. Like I've been the hiring manager.
Red flag alert.
Red flag. I've looked at the resumes, and when I see it switch every 18 months, I think, wow, it takes about 6 months to a year just to get you up to speed, and you're going to be looking for a new job. So that's not the type of people that I've hired in the past. So what I did is I did a little bit more diving on this clickbait. 95%. I said, what's the source? It was a Monster poll, monster.com. Guess who goes
Okay,
there?
yeah.
People looking for jobs. They survey the
Yeah.
people that are looking for jobs, 95%, and then they translate it. So very questionable stats there. But I did think it was interesting because it made me think, hey, if people are looking for jobs, way back when, back in 2000, I worked for Robert Half Technology as an IT headhunter. I heard it was a good job. I'd left General Motors and I said, let me try IT headhunting. If you remember, if you've been alive well, at least 40 years, if you remember the .com bust, I was a headhunter during the .com bust. It was not a fun job. What I would find, and I was up in Portland, Maine, is the newspaper would say, this company just had 500 layoffs. And I would get 20 resumes the next day, and they would say, hey, help me find a job. And I'd be like, well, I've got like one job to place all these people in.
Right.
And so my advice for any of you out there that are looking for jobs, while we can use a company like Robert Half or Kelly Temp Services, and I'll show those graphs in just a moment, there's no one that knows you better than yourself for looking for a job. While you may use a headhunter or a service, and they may have some ins, they're looking for hundreds and hundreds of people. So always look, if you're looking for a job, look hard for yourself. So let me look at Robert Half. Let's see here. And I pulled this up this morning to see how it had traded since the 20 years ago that I worked there. But in the last 5 years, and you figure all the things that have happened in the last 5 years with COVID, I thought maybe we'd see a spike during COVID, people using Robert Half. But this company has traded pretty much flat for the last 5 years. I mean, little uptick in 2022, but nothing that I would invest in, and certainly flat compared to the S&P 500 or any of our excellent investments. I will say that when I worked there, and I don't know what the current markups are now, but the markups on a person looking for a job were at least, you're not going to believe this, 55%. That's how much more. That was my minimum, but more like 70%. Wow. So going through a headhunter, you're charging the company 55 to 70% higher than you're paying the person. You think this company's got to be profitable, and here we are. This company trades flat. The other thing I would say is, why would a company use a headhunter like that? And companies do this, so guess what? When they want to trim their workforce, for anybody that's been a contractor or had contractors, who's the first person that gets cut? Contractors. That's it. So companies can trim people very quickly. So I just kind of giving you a heads up on that. Another one that was out there, and this company is about probably a fifth the size, is Kelly Temp Services or Kelly Services. And we see the same kind of chart here, very flat. So this is a 5-year chart here as well, and you can see that not a company we want to invest in. One more thing on unemployment rate. I went ahead and pulled up the unemployment rate from the Federal Reserve Economic Database, FRED, and you can see the unemployment is very, very low, continues to be low, 3.9%. But I thought interesting, let's take a look at it by education. So you can see on my screen, this is by education. So the red line is less than high school, and the blue line is bachelor's degree or higher. And what I noticed when you look at this, check out the tightening of it. Used to be, if you had a college degree, your unemployment was significantly lower than a person with less than a high school. But look how in the last few years, how tight that's got. Now, I don't know what that means or where that's going to go, but you also can see when recessions hit, those dark blue lines, obviously everybody's unemployment goes up and the less than high school goes up higher. So anyways, that's that. So let's get to what you've been waiting for, and that is the bracket update. Yes. So yesterday's bracket, number one, Google advances, Adobe, Johnson & Johnson, JP Morgan Chase, Steve's Alibaba advances, and a few others. But let me give you the standings. So Steve is 4-0. Wouldn't it be sad if he won his own contest and put the Ankerstar Wealth and his name was on there? I think we'd be disqualifying that. And no, he does not have any inside knowledge into the market. And there is one other person that is 4-0. So congrats to Russ for advancing with J&J, T-Mobile, Uber, and Tesla. And what's really cool about this is both Steve and Russ, both 4-0, they have totally different picks. They have no picks in common, so it's going to shake out. Other people that are 3-1. Hey, I'm 3-1. That's all right. Trisha, 3-1. Pat is 3-1. Spencer, 3-1. So we've got a few other people that are 3-1. On Monday, when the brackets open, we'll be doing the left side here. So we'll be doing both the Bill Gates division and the Steve Jobs division. So we'll see Uber versus Netflix, Abbott, T-Mobile, Shell, Taiwan Semiconductor. Steve has Eli Lilly, so don't root too much against Eli Lilly there. Number one, Apple. There, Steve just gave his Apple update. That should send the stock price skyrocketing to victory.
That's almost cheating, right?
Yeah.
For all the people listening to my Apple update.
Yeah, he's trying to swing the market. Walmart. I have Intuit, so go out there and get your Intuit on Monday. Just wait. Make sure you wait till Monday. And Berkshire Hathaway. So we will update then on that, on who advances. And by the end of next week, we will have our final four going into the final week. So with that, I'll have a great weekend and a happy Easter.
All right. Well, I love it. Thanks again for doing all this, Mike, for us for our competition. Want to wish everybody out there a happy Easter, a nice long weekend if you get an extra day or so. And with that, we will check back in you on Monday. Have a good one.